Live, but good morning, everybody. Happy Friday. Happy Friday indeed. Let me just make sure that I am officially live for you guys so that I don't just start randomly talking and yeah, okay. I'm live. Right. Happy Friday, everybody. It is the final trading day of the year. Of course, there is another week, but the markets will either be shut or slow. So I thought I'd come on and give you guys a little treat, teach you the things that I know, give you my analysis for today. And if you guys choose to take these trades alongside me, fantastic. But these are the sort of signals and trades that I give in my premium group. I do, of course, give trades in the free group, which have been going very, very well, to be fair. I think if I just, let me just double check, because I used to be, I was placing 2 or 3 a day, but of course I've placed now 1 trade a day in the group and leave it to run. So this week we have hit all take profits and no stop losses. Okay. Which is fantastic. Last week we had 1 stop loss, 1 day stop loss, 4 days profit, and the same for the following week. So in 3 weeks we've hit stop loss twice and take profit 13 times. Okay, which is brilliant. So if you guys wanted to learn to trade the markets yourself, feel free to jump in my free group and just take the signals alongside me. In the premium group, you get a breakdown. Every day you'll get something like this that you see on your screen, which is, if you're a trader, then you may understand. If not, then I'll guide you every step of the way. Basically what it is this is a setup that I'll be looking at today. Should price reach my potential buy zone, I'll see how the market reacts, what time it is when it comes to that zone. Because if it's out of trading time, out of the trading session, then there's going to be less volume in the market, which means the likely, that's why I call it potential buy zone. If, of course, like today, for example, we have high impact news here. If it reaches that area around that time, like yesterday, I won't take the trade. I'll take it later on if the opportunity presents itself. But this is my gold setup that I put in the premium group this morning, and I'll just explain why. I'll also be explaining a trade that I've placed today. So here you can see at 10 past 8, my analysis showed that it was a good buy opportunity for US 30. And if you see here from right now, as you can see, from the entry point, which was here at, there you go, 10 past 8, we're currently, now it's 25 pips up, but we did reach 45 pips up within the space of 20 minutes, of course. Our target is this area here. If I just lower it here, our target is this area here, because I've noticed that during London session, we do tend to get 60 to 70 pips. However, of course, the trade has now become a 1-to-1 because we're 30 pips up and the stop loss was 30 pips. Okay, so feel free to, of course, the guys can take their money or leave the trade running. Okay, so let's go back onto gold setup. This is what I'm looking at today. So price is in an uptrend, as you can see here. We are in an uptrend. This was a previous level. I can delete that now because we've taken that, we've passed that. But what I look for every single day is basically where the market looks like it's going and what it's left behind. So here is my first signal. Yesterday was a change of character. What that means is basically whenever it's reached this area, yesterday, it rejected. Once it passed through that with a strong bullish momentum, meaning a strong buyer's candle, okay, it became a change of character, meaning as it's touched this area, it's rejected. As it came close to this area, it's rejected. The character is showing rejection, okay? Now this character here is a change of character because it's broken through. So that's step one, okay? But we don't get a trade from that. Next thing is, I noticed throughout the night we had a break of structure. Break of structure follows a change of character, okay? So we can see here, like this here, it's rejected here, it's rejecting under, it's rejecting under, and here you can see it's it's broken out. The structure's been broken, okay? What that does then is that gives me a range to look from. The range is here, as I've just mentioned, the bottom of here to the top of here, okay? And what I'll simply do from there is drag the fib, okay, from the bottom to the top, say the bottom of this range to the top of where it's been, drag it across, and I'm going to look for a 0.76 to 0.785. If it reaches 0.85, even better. If it reacts from there, fantastic, okay? 0.76 is my zone. So as you can see here, what I'll just do then is I'll draw my box from the top of the 0.76 to here, okay? Label that potential buy zone. That's another rule of my trading strategy. Next one is, of course, looking for imbalances, which you can clearly see here. Now, an imbalance is basically where big buyers have come in one go, like huge volume has come in one go, and it's left a gap, okay? Or vice versa, sellers like this one here would be an imbalance, okay? But that's been filled now. The imbalance is between the first candle here to the third candle, like that, otherwise known as a fair value gap, okay? You guys will learn all of this as you learn more about trading and about my strategy. But for now, you can just simply follow what I'd say, and then you can see it play out for yourself, okay? The fair value gap has been created. So once this gets filled, we're going to look to get in, to enter. So let's say it comes in, it fills there, rejects. We look for a 30 pip stop loss maximum, and we'll target the highs, okay? Like that. That is the ideal trade for today. And of course, you know, if it wants to carry on after that, fantastic. But this is what we're going to be looking at. Now, why do we look at this particular area? Well, I'm looking at this area because, as I've mentioned, we have a break of structure. We can delete that because that's gone. We have a break of structure, which means what price does is it goes out, but then it likes to come back in and collect the liquidity and fill any imbalances. So this is liquidity here, okay, represented by spikes. As you can clearly see these little spikes here. That's where the price has gone to and then rejected from, leaving money there basically. And the market loves to chase liquidity, it loves to go after the liquidity. So what I can see happening here is obviously this is exactly where price is right now at 2050. What I can see happening here is sort of like this. Like that, okay? Why? Because then what that will do is it will take out this liquidity here, okay? And price doesn't just drop and go up like an elevator, it's like stairs, all right? And then what it will also do is it will fill this imbalance here before taking its intended direction. Now, a lot of people and a lot of traders will be taking a buying opportunity around here, okay? If you're one of them, fair play to you, right? A lot of buyers will be taking opportunity around here. Why? Because they'll see this. Let me just move some of this mess, sorry. Because they'll see this liquidity and it will be taken, yeah? They'll see this gap here, okay? And that will be filled. So then they'll enter here at the 0.61 of the Fibonacci. So what you can see here, this tool that I'm bringing up is a Fibonacci tool, which is a great tool to use when trading. Basically shows you where the markets, areas of the market where it could pull back to. And as you can see here, 0.61 is where a lot of traders get in. But that is, to me, that is getting into a trade too early, okay? So what I wait for is the 0.76 to the 0.85, which shows you my zone down here. And what it does is it just makes the trade stronger. So it's taken out this liquidity, filled this gap here, and then filled this imbalance here, which means it's left nothing on the table for it to not continue its move. Okay. There we go. Okay, that's that. That's my trade setup for today. Okay, as you can see, posted in the group at 8 o'clock this morning. This is where we're at right now. So if it doesn't come to this area, don't take the trade. Simple. Let me just put my markings back on. Yeah, there we go. And that's it. That's how we trade. So basically, you'll get all of this. If you want to learn how trading works, great. If you want to become a trader yourself, fantastic to look at. But for the average person who doesn't know how to trade, they'll look at this and it won't make any sense to them, which is perfectly fine. Okay. So what would happen is you would simply, in the group, you would get something that looks like this here. Buy this with your stop loss here, you take profit here, and all you do is simply put those into your phone or your computer when I give the signal. Okay, and as you can see, it reached its zone beautifully. 45 pips it made. It's back at the entry point, which is what it loves to do at around about 9 o'clock. And we could either do a few options. Number one, you can get out here when you see this rejection candle. Number two, you can leave the trade open with the stop loss where it was and just get on with your day. Or number three, you can wait for this pullback and then enter, which a fair few people may be doing. At 9 o'clock, it likes to repeat the same thing that it did at 8 o'clock. So how do I get my analysis for US 30? Well, first of all, zones. Okay, as you can see here, the level of support's happening. It's rejecting this area here. So if it passes this, it may be a fake out, which is why we give ourselves a bit of space. But following that, it of course will hit the stop loss. So first of all, we have a support zone. Secondly, we look for what the news has done at that time. So at 8 a.m. and 2:30 p.m. every day in the UK, Dow, NAS will release those, and you can see this for free on cnbc.com. And you simply go onto markets, US market, Dow 30, and then you percentage change button here. And as you can see, 2 are in negative and 28. Well, and one's on 27 has released positive change. Okay. And these are the companies that S30 are, basically. So you can that we should anticipate the market to move up. Okay, the news has been good. And what this is here, this is a visual representation of the market following the release of the news and then people selling off here. This would be TP1. Okay, it would be TP1 because of this area here. Okay. So at TP1, you can do a few things. You can close half of your trade. So let's say, for example, you opened a trade here at 1.0, just to keep it simple. Okay, 1.0, you would go onto your phone and you'd edit the trade, and you'd edit it to 0.5, and then you'd click close, and that would close half your trade. So then when it comes back to here, if it continues up, then it carries on. If not, you've managed to collect some profits and left the rest running. Okay. But as you can see here, looks like it's doing exactly the same thing that it did earlier, and it's going to continue up, which is obviously great news. So going back to gold, guys, ranging at the minute, as you can see, it's found its zone around here. We're just waiting to see what it does. Is it going to break above and continue, or is it going to come here, collect this liquidity, fill this gap in, and then we're going to get our move? But just remember, guys, if you are trading, high impact news at 1 o'clock, at 1:30, and at 3, and also it's Friday, so you'll see some moves in the market you may not see every other day of the week. So just be very wary of that. But yeah, that's how trading works. You buy and you sell, and that's how you make some money. So let's show you, for example, if we stick with the principle of a 1 lot size here, and you took the trade earlier, given at 8 o'clock, that would be £400 you've made there. And then of course it's pulled back, depending on the broker you use and the margin levels you use, but I'm just trying to keep it simple. 40 pips at a lot size of 1 represents £10, so 40 times 10 is 400. And then of course comes back here, you can re-enter if you like, and away we go. Hopefully that's made sense for you guys. I try and keep things as simple as possible, but I do use a few indicators just to give myself as many sort of confirmations as possible. But what I mainly do is just look at the charts from a naked eye point of view, like this. Look at that and just see, what do I see? Okay, what do I see? Okay, let's go over it. If I just go onto a fresh chart, so I'll walk you guys through it for any of you that are listening and watching. Okay. Delete that. Delete those. Right. Fresh chart. Okay. What you guys see straight away is this is going up. Can you see that? See the upwards direction? It doesn't. Let's not focus too much on what's happening over here, just because this is this week. Okay, so this week, we are looking up. Doesn't mean there's not opportunities to sell. Excuse me, but we are upwards direction, a bullish momentum, buying momentum. So when this shows that we are in a upwards movement, we are going to be looking for buys, right? But we don't want to buy at the top. We don't want to buy up here. We want to buy when it pulls back. Okay. So the pullback is represented by purple candles. When it's purple, the candles are down on my chart, and when it's buying, it's going up, right? On my chart, you can change the colors to whatever you like. So if we're looking at up, we see here that the market moves down. Okay, the best way to mark out these zones is the previous movement. Okay, so let's say, for example, you're here. Okay, this is where we were at yesterday, for example. Okay, the last movement down, which was this one here, can you see that? This purple candle. So what I do is I draw a box of that candle, right? That now becomes a demand zone. That means that's where the market's driven down to before big buyers came in. Okay, and it created an area of demand. So what this will do is, quite often this is going to be our zone that we'd mark out, because quite often the market will come back to this area. Okay, and let's just see what happens. Oh, that was quite quick. But yeah, as you can see, if you followed that and you entered a buy when it reached your zone with your stop loss below the zone, and you targeted above, then yeah, it wouldn't have gone into any drawdown whatsoever, which is always nice. And then of course has your and then it hits your target, right? Remember, the reason why I took that trade just then was because we're in a bullish or an upwards direction. So we're looking for buys, but we're not looking to buy at the top. We're waiting for the last movement down. We're waiting for it to enter that zone. So let's just go over that again. This is what we saw. This movement down. The next candle was a big movement up. Ignore that because that's high impact news. I can guarantee that. It's the movement where the candle fills up, not these spikes, but where the candle fills. Okay, so that now continues our trend up, and this becomes our demand zone. Okay, the next one is it comes back into the zone. So take it. Comes back into the zone again. You could take that if you didn't take the one before, and then third and final one comes back into the zone. This is why, especially when trading, if you've just noticed there, 3 times it shot up, but then it came back into the zone. This is why in trading, and remember, the first one was a 50 pip move. The second one was a 70 pip move, and the third and final one was probably 100 pips. Yeah, that just didn't come back. So just remember, guys, like, take your profits because it will come back down. So if it goes 50 pips, take some. If it goes 70 pips, definitely take some. If it goes 100 pips, that should be you finished. Like 100 pips is great. You can leave some on the table to continue running. You know, take 70% of your profits, leave 30% running, or whichever way that you want to do it. And that's how you'll become more profitable, guys. And now that zone here is invalid now because it's been mitigated, it's been filled, whatever you want to call it. Okay, so then we look for our next zone. Our next downwards movement was this one. Okay, but this is way too big. So what we do is we drag it across, but then we refine it. How do we refine a zone? Okay, we go down to a smaller time frame and we look for something like this. Okay, or even this. That's up to you. Okay, now we've got two smaller zones. All right, let me just make that a bit clearer. For some reason I've okay, so now we have 2 zones that we can go from, and the choice is up to you. Like, this would be mid risk, this would be low risk. Okay, and of course you're probably looking at the market saying it's way up here. Why would it come down here? For many reasons. Like I said to you, it's elevator. It's not an elevator, it's stairs, and it needs to fill gaps. It needs to collect orders. It needs to get to a level of demand or supply that the majority of the traders and institutions are happy with. And once it does that, you can enter. So yeah, these are the 2 zones here. And as I mentioned previously, these are the zones that I'm looking at actually today, right? It's where I'm at right now. So this zone here would be the 0.61 probably, and this is my 0.76. Let's just zoom that up. Ooh, bottom of the and there you go, 0.61, 0.76, as you can see, clear as day, right? And as I can just give you the same markings that I've given you on my other chart, because I look at things the same way. Okay, we've had a break of structure, meaning that it's rejected here. It's rejecting under this area, under this zone here, under this, under this, under this. Once it's broken out, that's it. That's your break of structure. Okay, done. So it's broken the structure that's been created before. Okay, so we have our now we have our consolidation range. Okay, break of structure is this whole structure here, but the consolidation range is this bit here before the break. Okay, and then what we simply do is we take our fib from the bottom of the range to the top of the highest point, and of course we do the opposite if it's selling. And then we get our zones. 0.61 is this one where I think a lot of people will start coming in. 0.76 to 0.85 is our zone. That's where we'd go, because this is where, and of course you have liquidity here. And if I just turn everything off like this, that's it. This is where the majority of traders will come in, and you might be wrong, you might be right, because there's been a few times when I've marked out this zone here, and it's not come to it. Okay, but remember, if you're not in a trade, you can't lose. Okay, and sometimes it's better to not be in a trade. But for here, this is where a lot of buyers will come in, and they'll put their stop loss like here. So what we're simply doing is we're getting in at their stop loss, because the market will drive down, take out their stops, and then continue up. Okay, and if it, like I said, if it doesn't reach this zone, we're not entering. Simple. And that's how we trade. And as you can see, as I've just mentioned as well, 9 a.m. likes to react just like 8 a.m. And we're back to 28, 30 pips in profit. All right. Okay. That's it for today, guys. So feel free to screenshot this or have a look back later on to see how this plays out. And yeah, I look forward for you guys to either join in my free group and take the signals with me, or joining up the Telegram premium group, which is it's a very small cost. And in there, you'll get top-down analysis, you'll get one-to-one coaching, you'll get news reports and stuff, and plenty more signals in there. So just as an example, you pay £100 to enter, and then £30 a month to stay in the group. And if you put a one lot size on earlier today, you'd have made £400. So there's your money back and a few months in advance. And I also gave it you for free on this live as well at 9 a.m. I said you can re-enter at the same zone, and if you did do that, you would now be 27 pips in profit. And at no time has it been in drawdown, which is always nice. But we do hit stop losses. There's been occasions where we've hit a few stop losses in the morning, but then in the afternoon we've made the money back and then some on top. Or there's been days where we've lost it. It's part and parcel of the game. I always try and find a safe way of making the money back and finishing either at break even or at a win every day. But you know, it is what it is. Sometimes you have to take it on the chin. Anyway, guys, have a fantastic day, and I look forward to any messages or anything with regards to trading or anything you guys want to reach out to me about. It's all about it. Bye-bye.